Okay, this is one of the example that I have in front of you. So what is the relevant cost? So relevant cost we need to see. So whether the cost is relevant for making decisions in the management, in the organization, so that we need to calculate. So in this example, Northern Optical ordinary sells X lens for $50. The variable production cost is 10 and the fixed production cost is 18 per unit. Variable selling cost is 1. So this is a selling expenditure, and these are the fixed expenditure, and the variable production cost is 10, and the lens cost is 50. So a customer has requested a special order for 10,000 units of X lens to be imprinted with the customer's logo. So this special offer would not involve any selling cost, but for this particular order, the Northern Optical would have to buy or purchase a imprinting machines for $50,000. For this particular order, that the company have to buy one new machinery. There is no any alternative for this. It means now in this case, we want to calculate something. For example, so this is the scenario. The next slide will show you what is the rock bottom minimum price below which the Northern Optical should not go in its negotiation with the customer. In other words, below what price would Northern Optical actually be losing money on the sale? If means, so what is the relevant cost? What is the relevant cost that we want to calculate? There is an ample ideal capacity to fulfill the order. Now, what is the relevant cost in this case? So in this case, you need to think over it. Think over it that we know that variable cost we have $10, right? So $10 is the variable cost. So first of all, the $10 that we will calculate. So $10 in the 10,000 units. It means 10,000 into 10. That will be the expenditure. Expenditure mean cost. So $100,000 that will be one expenditure. Second expenditure that we can calculate, that will be $50,000, right? So to produce $10,000 units, we need to spend two amount. The one amount that will be $100,000 and second will be $50,000. The total will be 150,000. So that is the total relevant cost for making decision. So number of units will be 10,000 and average cost per unit will be 15. So this in this way that we can calculate, we can think over it that which cost is relevant or which cost is irrelevant for making some decision. And also it depends upon the what kind of decisions are there or which decision that a manager need to take in the company. Next, we have target costing. So target costing, it provides an alternative market-based approach to pricing new product. So there is a different approach, a market-based approach for pricing the new product, right? And the target cost that will be is equal to the estimated selling price minus company's required profit margin. So the whatever the required profit margin will be deducted from the sale, so that will be the cost. It means the company wants to set the target cost. So this is the cost above this cost that we cannot tolerate, right? So that is the target cost. Advantage, this is advantage over the cost plus approach. A product is not made unless the company is reasonably confident of the adequate profit being achieved. It means normally the company is not going to go for making or manufacturing of the new product unless the company have the full confidence that there will be some adequate and proper profit that can be achieved by making and selling of the product. So this is the advantage of a target costing over the cost plus approach. This instill a much higher level of cost consciousness. So it means in the target costing, so consciousness, like the manager is more concerned about the cost first. Now, utilization of constrained resources. What is the meaning of constraint here? Constraint means some limited resources that we have. On the basis of the limited resources, that the manager is going to take decision whether we choose product A or product B, or maybe in the product line, whether how many units of the product A or B should be given preferences for the manufacturing, right? And what is the secondary and what is the first primary, I mean to say. So all these things will be calculated on the basis that if there will be more margin for that particular option, and definitely we will go with that. Now, firm often face the problem of deciding how to best utilize the constrained resources. There are a number of resources, maybe number of hours, and maybe you can say number of suppliers like they are there, and supplier are providing a constraints, maybe in a week or a month, only this limited units, or maybe in kilograms, or maybe in units, or maybe you can say if you are having a number of employees, or they can work only for like a 2000 hours, or the machine that you have, and the capacity of the machine is that like 2500 hours that machine can work, not beyond that. It means that we have some constraints, we have some restrictions. So on the basis of those restrictions, the manager is going to take some decision. So in this case, normally the fixed costs are not affected by this particular decision. So management can focus on maximizing the total contribution margin, right? So let's look at one of the example. And sign company, this example is here in front of you. So this company produces two products and selected a data which is shown below. Product 1 and product 2. So in the product 1, selling price is 60 and 50 in the product 2. Variable expenses per unit is also given, 24 and 15 respectively for the product 1, and 2 is the contribution margin. Current demand per week is 2000 and 2200 for these two products, product 1 and product 2. We know that the 40% is the contribution margin, like 24 divided by 60 into 100, 15 divided by 50 into 100, so 30%. So processing time required on machine A1. So this is the A1 machine which can produce the product 1 and product 2 both. On A1 machine per unit, 1 unit can be created and be manufactured, and which require 1 minute. In one minute, 1 unit of product 1 can be created, but in half minute, the 1 unit can be created here in this case, right? So this is the constraints. This is the constraints that we have. So current demands that is available. Now look at this. We can see that machine A1 is the name of the machine, is constrained resource and is being used at 100% of its capacity, and there is excess capacity on all other machines. And machine A1 has capacity of 2400 minutes per week. In 1 week, the total capacity, 100% capacity is using, and the capacity says that 2400 minutes. This is the maximum limit for this machine to be used. Now, the should and sign focus its efforts on the product 1 or product 2. Now, there are two products. Which product should be produced first or more, because that we have a limited resources, 24 minutes, that is the limited resources that we have, constraints resources. Now look at this. What generates more profit for the company using 1 minute of the machine A to produce product 1 or product 2, right? So now in this case, we know that if we are going to manufacture, uh, product 1 or product 2, we need to find out which is the better one. So in this case, we need to look at the previous slide and see what is the contribution margin. So contribution margin here is, we can say 24 here and 15 here, but this is the contribution margin that we have calculated. Now, as per the question is saying and asking that which way to go, what is the preferred unit. So in this case, the unit B is the preferred one, like means product 2. So with 1 minute of machine A1, we could make a 1 unit of product 1. Yes, in 1 minute, 1 product can be produced with a contribution margin of 24, that we know, right? And 2 units of product 2 that can be created with each with the contribution margin of 15. So 15 per unit. So 15 into 2, 30. So it means we are taking the base. The base is the constrained resources, that will be the base. The number of minutes. So number of minutes are very limited. If 2400 minutes are exhausted, machine will be of 0 value. It's not going to produce any more. So it means, it shows that if we produce the product 2, then it will be having more margin. Now, how we can calculate? Once again, look at this. So the utilization of the constrained resources, the key is the contribution margin per unit of the constrained resources. So what the important thing is, the important factor is the contribution margin per unit of the constrained resources. So what is the contribution margin per unit? So in this case, so contribution margin per minute. Now we are going to calculate per minute. So per unit we have like 24 and 15 here, and here the 24. Like what we are going to do? So we are going to divide with the 1 minute. In 1 minute we are going to produce this unit, right? 1 unit. And in half minute we are going to produce 1 unit. It means if we calculate that how many minutes and margin per minute, means contribution margin per minute we will earn, so that will be $24 in 1 minute, and here the $30 in 1 minute, because we are taking the base. The base is the constraint value, that is the minimum number of minutes that we can use, the machine can work on. So product 2 should be emphasized because it provides a more value use of constrained resources. Machine A1 yield a contribution margin of 30 per minute as compared to 24 for the product 1. Okay, so now look at this. The contribution margin per unit is 24 and 15 we have, and times required is 1 and 50, 24 and 30. If there is no other consideration, the best plan would be to produce to meet current demand for the product 2. It means the demand of this article, like product 2 article, that is more, and we should try to meet the current demand for that product. And then whatever the remaining capacity, means number of minutes we can use, or the machine can be on or work on, right? So that will be the rest of the product can be used for that purpose. So look at this. So 2200 units, like, so weekly demand for product 2 is a 2200, and time required per unit is half minute. It means 1100 minutes are required. 1100 minutes are required here in this case to produce and to meet all the demands. And the what is the time available for the second product, means other product one. Total time available we know 24 minutes. 1100 minutes that is used for this product 2, and rest of the time that will be 24 minus 11 is a 1300 minutes will be available for the product one. So time will be available for the product one 1300 minutes. Now let's how this plan would work. So in this case, so 2200 multiplied by half minutes, 1100 minutes, that is for the product 2. 24 minus 11, 1300 divided by 1 minute. So in 1 minute, 1 unit can be produced, right? So 1300 units. It means we will be able to produce a 1300 units for a product B and 2200 units for the product 2, like this. So according to the plan, we will produce 2200 units for the product 2 and 1300 units for the product 1. Our contribution margin look like this. So the contribution margin will be this much of product into the contribution margin per unit, which is already given. We will multiply this one, and this will be the total 64,200 is the answer in front of us. Now we have similar kind of example. So we have number of chairs and a number of tables. So number of chairs we have, a number of tables we have, the variable cost per unit, board feet per units, and monthly demand. So all information is available. All information is available. So in this case, this is the name of the organization, Colonial Heritage. Make reproduction colonial furniture from the select hardwood. The chairs $80 per unit is the selling cost, and 400 is for the table. It means some hardwood they are going to buy and manufacture some chairs and tables. Variable cost per unit is also available, and board feet per unit. It means for making a chair, 2 feet is required, and for making a table 10 feet is required, right? And monthly demand is a 600 chairs and 100 tables. Now the company's supplier of a hardwood will only be able to supply 2000 board feet, means 2000 feet wood or board is available this month. Is this enough hardwood to satisfy the demand? Now the first question is the true and false question, means yes and no. So whether you will say yes or no, means the 2000 board feet, if we are going to have from the supplier, will meet both these demands. The demands are 600 and 100. This is demand, 600 chair and 100 table. Now you need to calculate how much board is required, first of all, because we are going to compare with the board feet. So board feet per unit we have 600 into 2 is a 1200, and 100 is into 10 is 1000. So total will be 2200. So 2200 board demand is there, but 2000 board feet that is available. It means still shortage of raw material for making chairs and tables. So answer should be no. Yes. So why this is no? Because of this explanation. So demand is 2200, which is more than 2000. Now the question arises here, the second question saying exactly the same information we have. The companies and suppliers of hardwood will only be able to supply 2000 board feet in a month. What plan would maximize the profit? Okay, according to the limited constraints, that company want to use that 2000 feet of board wisely and need to decide how many chairs and how many tables should be produced. So in this case, what should be done? The first of all that we need to calculate what is the limited constraints we have number of feet. So we need to find the contribution margin in the number of feet for one unit. So then we will be able to calculate. Now in this case, look at this. This is the right answer. I'm just explaining the 600 chairs and 80 tables. This is the appropriate allocation of resources to have maximum profit. In this case, we know 80 and 400, 30 and 20, $200 is the variable cost, selling cost, and contribution margin. We have 50 and 200. Board feet is 2 and 10. And we know that contribution margin per board feet is $25. So $25 is the figure that we have calculated. The contribution margin is the main, but that we want to calculate not only the contribution margin alone, but the contribution margin per board feet, right? So it's a 25 and 20. Now we can see that if we produce more chair, and this one is a $20 margin, this one is a 25, so where we can have more profit. So in this case, production of chair is a 600, and board feet require 1200, and board feet remaining will be 800, and board feet per table will be 10, and production of table will be 80. So now how we have calculated all these figures? Just think over it. So in this case, that we have calculated the 600 chairs. So 600 chairs, if we manufacture, if this company is going to opt this method, and 600 units of chairs, how much feet, board feet is required? So 600 into 2 is 1200, right? So it means board feet required is 1200. But we know that we will be having only 2000 feet, board feet. So 2000 minus 1200 will be 800 feet. So 800 feet will be remaining for making the table. And we know that the 10 feet is required for making one table. It means 80 tables can be produced. Very simple. Now, next we have, as before, colonial heritage supplier of hardwood will only be able to supply 2000 board feet this month. Assume the company follow the plan we have proposed, and up to how much should the colonial heritage be willing to pay above the usual price to obtain more hardwood? It means the question is asking that no doubt the supply is limited, that is a 2000 board feet this month. And if this company, Colonial Heritage, if we want more board feet, how much should this company be willing to pay above the usual price to obtain more hardwood? So how we can calculate? So look at this. So $20 per board feet they have to pay for additional unit if they want to make. The additional would be used to make the table. And in this case, the each board table of additional wood will allow the company to earn an additional $20 of the contribution margin and profit. So additional per wood that we have already calculated. So if additional per wood is required, so $20 that is the maximum that company can afford. In this case, there will be no any loss. So next question we have, as before, colonial heritage supplier of the hardwood will only be able to supply 2000 board feet this month. Assume there is unlimited demand for chair. Now the scenario change. There is an unlimited demand for chair. The chair demand is too much, unlimited demand. The products are you manufacturing, and right away there you will be able to sell it. Up to how much should the colonial heritage be willing to pay above the usual price to obtain more hardwood? Obviously, that will be 25. The reason being 25 because since we know that there is unlimited demand for the chair, then chair are more valuable use of wood than table. All of the additional wood would presumably be used to produce chairs. Whatever the additional wood they are going to buy, definitely they will be using for making the chair, not table. In this case, in this use, each board feet of additional wood will allow the company to earn additional $25 of contribution margin and profit. So it means for this much that the company will be willing to pay above the usual price to obtain more wood. This will be the maximum they will be having. Now, at the end, we can say managing constraints, the product only produce only what can be sold. Means if the chairs that you are going to produce is going to sell very quickly like a hot cake, so only those product should be produced which can be sold very easily. At the bottleneck itself, improve the process and add overtime or another shift if it is possible, because the fixed cost will remain the same. Hire new workers or acquire more machines and subcontract the productions, right? So this is like how you can manage the constraints and eliminate the wastages and streamline, means without any obstacle, without any further hurdles. Process and production should be smooth. So in case of joint product cost and contribution approach, in some industries, a number of end products are produced from a single raw material. Raw material are there. From the single raw material, number of products are being used. Yes, just like the table and a chair example. The raw material goes through the processing. Raw material, it will go through the processing, and the split of point will come in the various products. That is called joint products that are identified. And after that, some process, there will be they can differentiate something like the cost incurred up to the split of point. Before that we cannot split, but after then we can split. So that is a split of point are called joint cost. These joint costs are always irrelevant in decisions concerning what to do from the split of point forward. A common decision that management has to make is to decide if the joint products should be sold at the split off point or processed further, right? This may be one of the decisions can be taken by the management. It is profitable to continue processing a joint product as long as the incremental revenue from the further processing is more than the incremental further processing cost. If the revenue is more than the cost, definitely we will go further. In the nutshell, we can say that every decision includes a choice between at least two alternatives. The relevant cost analysis framework focuses only on cost and benefits that differ between the two alternatives. A company has a bottleneck if the demand for the company's produces product exceeds its ability to supply them. Manager must decide what to make and what not to make. The product should be emphasized with the highest contribution margin per unit of the constrained resources. Manager should recommend further processing and immediate product as long as incremental revenue is more than the incremental cost incurred after the split off point. So this was all about the relevant cost that we have discussed today.